welcome, everybody. We are back, your friends at the Legacy Wealth Capital Group.
We don't play that because it's like we don't care what's going on. We make it happen.
The office pretty much depended on us. If we didn't work, the office didn't work, basically. It couldn't function without us.
I think about like, what could we have done different?
And you could follow that model with your product.
Your service will not sell because people are going to feel that conversation. Welcome, everybody. We are back, your friends at Legacy Wealth Capital Group, and I got my partners. We all in the building tonight. Sean had took off on us last time. He had some business to handle. He was actually working for the business while he was out, but we got him back tonight, and we got a great topic for you guys. I think as we talk about going public, buying businesses, structuring your business properly, all of these things, investing in businesses, a lot of times there's a lot of hype around the big companies in the market, your Facebooks, your Nvidias, if I hear Nvidia one more time, I don't know what I'll do. Your Teslas, these are the only companies that ever get shared with you, because of course they're big, they're $1 billion, they're deca unicorns. But can you really afford, and how many people can really afford to buy significant stock in those companies when the share price is $200 plus per share? How many can you honestly buy? And if you do the math, and I'm gonna bring Sean and Kyle up, and then we'll get into the presentation. But just do the simple math. If you can only afford to buy 3 or 4 shares at $200 each, you're $600, $800 in. Now, if that share price goes from $200 to $205, how much money are you really making? You might make $20 on top of what you made. And then here's the thing they like to get you with, Kyle. Well, it ain't about how much you make right now. It's the compound investing that when you buy it and you reinvest it over 30 years, it'll be worth something. Now, I'm not saying that there's no money to be made in the market. There absolutely is. I'm saying that the people who make the most money in the market are those individuals who can put down a significant amount of capital in the market. So I think I can't even remember who it was, but I know they bought a couple of $1 million worth of Nike. They're going to get some return on that. Can you put $1 million in Nike? Not so much. So before we jump into the conversation, which is about the microcap ecosystem, meaning these are your companies that are microcap. Microcap usually is in between or below $300 million, $30 to $300 million. That number changes based on who you're talking to, but that's their worth. That's their market capitalization. And so there's a lot of opportunity in the microcap ecosystem that doesn't get the headlines. They don't get the big news. You don't hear about it, but they're doing real things. So before I bring the presentation up, Sean and Kyle, you guys want to weigh in on that?
Yeah, I mean,
you know what? Real quick, Sean, real quick. Because I got that short-term memory loss. But you know what? I was going to send y'all something that I was just looking at this. You guys know Cristiano Ronaldo, the soccer player, right? Player. Right. Okay. He invested $7.5 million into Herbalife. $7.5 million, and Herbalife stock went up like, what is it? I don't know, 15%, something like that. But what you just said, so think about it, $7.5 million. Who's got that kind of money? You know what I mean? Now, he's made $280 million. He's the highest paid soccer player in the world. But he could do something like that. But think about if he took $7.5 million and put it in the Legacy Wealth Capital Group at 25 cents. What would we jump up to?
That'll be a game changer.
Right. So yeah, so go ahead, Sean. But that's what I want. Yeah. What would we come out at? $150 a share?
It'd be crazy. It'd be crazy. It's right now currently the only people investing in the stock market is I think I heard like the top 10% of the highest earners. And you got the hedge funds and stuff like that, and PE firms that's buying stocks and stuff like that. So, and the market is basic. A lot of these larger companies kind of pricing themselves out to the average investor. So you're right. I mean, it doesn't make sense investing $1,000 into a high a company with a high stock price. I think the only way it would make sense is if you're investing something in it and you're just living off the dividends. Because a lot of these companies, if you're looking for a return, I mean, you have to wait 90 years before you can get anything significant. Yeah. I mean, that's my opinion. If people are investing in these companies, they're doing it for a dividend play. But even that is pennies compared to some of the lower companies or some of the mutual funds that you can invest in for a lot lower amount of money and get a higher dividend.
But let's even look at it in a different aspect. Think about this. So what happens right now? Because you guys know, basically in the 90s, late 80s, 90s, they got rid of basically companies that give you a a pension.
Mm-hmm.
And they started generating, back then, that's when the 401ks came out. So now you got people that are basically who don't know how to invest in their future. So what are they doing? They're listening to somebody that basically is probably being paid off by a fund or whatever that's going to say, hey, push your clients here or whatever. So then they give you these options. So you invest in the Magellan Fund, the Vanguard Fund. But these people are now putting their life savings, all the years that they worked, into the hands of someone else. Not the company that they work for, but now they're just giving it to somebody else. And what's sad about it is now it's happening in the military. The military no longer gives out, all of us are prior military. They no longer have pension. You do 20 years in the military, they say thank you for your service. The only thing you have is a TSP, a thrift savings plan. So now they're doing the same exact thing with veterans who have no idea of how to invest and where they should invest their funds. It's the rich getting richer, and there's the poor getting poorer. Unfortunately, uneducated investors basically investing for themselves, which is sad.
Yeah, and I think, and it's great that we had these financial movements and financial literacy movements. And again, what I want the audience to take away is, and I made a post about it, for business owners, all business owners should know all of their options, just like all individual people should know all of their options. And we lean so heavily towards the 401k. And to your point, you put it in the hands of an advisor. And most people don't do that. They just have a 401k. It's kind of set up in your 2050 retirement. And then that money's just safe. It's balanced. It has a purpose. But they don't tell you that about active investing. And I'm not talking about stock trading. We all know that there's only a handful of people that can trade stocks daily and make some money. Most don't. Most lose their money. They don't ever make any money. But then again, you have the people who preach invest in the stock market, but they only tell you one part of the market. And that's the only part they know, the top 5 companies to invest in. And they leave out the other 1,000 that have potential. And we're not even talking about investing in private companies, which is more risky. You need to do your due diligence. You need to make sure you have a sound background and advisors to help you. But they don't even talk about that market. So I purposely picked these 3 companies for a reason. I picked them because they're on the microcap. Number 1, they're small. Number 2, I picked them because they're boring. They're not your flashy business that everybody wants to jump into. They're even more boring than your HVAC, plumbing, and electrical, because that's what they call boring businesses. You got your Cody Sanchez's of the world and all of them. Go get you a laundromat. Go get you this, the boring business. So I picked these businesses because they're boring too. They're boring, but they're boring and making money. So,
Real quick, too, Tyrus. Real
yep,
quick.
go forward.
Yeah, and we're not advising to buy these companies or invest in these companies or follow our instructions or anything. None of us are brokers. Go to your local broker if you need advice on what to invest in. Um, we're just giving our opinions and just kind of pointing out some things on this little spotlight here.
Yep, options. This is educational and informational to open your eyes to other options. So these are three companies that IPO between 2025 into 2026. Aktis Oncology, Sionna Therapeutics, and ChowChow Cloud International Holdings. You ain't never heard of none of them. So Aktis Oncology was the first biotech IPO. Now, biotech is blowing up, especially in Maryland and in other places. Biotech is blowing up. They were the first biotech IPO 2026. They do radio pharmaceuticals. They had a $318 million upsized offering, 4% growth in early trading. Sionna Therapeutics, 56% growth in 2025. They focus on cystic fibrosis. They IPO'd in February of 2025. And ChowChow Cloud is tech and cloud services. So, everybody's talking about AI, right? AI, let me get the next agent. Let me get on Claude. Let me get on ChatGPT. But are you thinking about the companies underlying? And the only company that they know underlying is NVIDIA. That's the only one that gets the hype because they make the chips. And that's what people jump on. But there are other companies, a 215% performance growth in day one. So just looking at an overview of this company founded in 2020. So just 6 years ago, we're not talking about they took 20 years to go public. 76 employees, their focus is solid tumors. And then they had a lead program with a targeting phase. So whenever you're dealing with medical, biotech, you go through these programs and you go through these targeting phases because you have to get clear. So there's all the regulations and things behind that. And so essentially they were pushing a proprietary mini protein radio conjugate platform. I'm not going to read all the rest of that. You can go do your research. But again, this is a company that doesn't have the hype and the flash, but they're doing really great work that impacts lives. Mm-hmm. We talked about last week, kind of that funding history. Companies don't just wake up and raise $800 million unless they're Tesla and already out there. They typically raise money over time. And so in 2021, 77 million, they were led by MPM Bio Impact. I want to pause right there because a lot of us want to raise capital from anybody without actually going to the people who may be in your niche and industry who will support you. So make sure that when you're talking to investors, narrow down who your ideal investor is. It helps with the conversation. Next Series A was 84 million. And then they did a Series B in 2024 for 175 million. So pre-IPO, they raised a total of $346 million. January 9th, 2026, the IPO price was $18. They offered 17.65 million shares. The gross proceeds before any discounts was 318 million. And then that moved up their market cap to $986 million. So as you can see, they had some big boy underwriters, JP Morgan, Bank of America, Leerink Partners, TD Cowen. If you notice, Eli Lilly invested 100 million, purchased 556 million at the price of $18, representing approximately 1/3 of the offering. That's a pretty good one right there, Kyle. Yeah. Now, we all know that the real money was made when those pre-IPO people sold their shares in this IPO. We don't know the price if we go back. They raised 346 million over these years. We don't know how much they bought those shares for. But we do know it was likely well underneath $18. Mm-hmm. So while the market begins to buy at $18, the people who invested in the startup or the pre-IPO or the private company are the people who are selling their shares now in this IPO. I'm gonna pause and let you guys jump in if you have anything you want to add to that.
Yeah, my first thought is, you have the series raises, but I bet you there was probably raises before that.
Mm-hmm.
And that raise probably was so insignificant that you could have got it for probably pennies on the dollar, you know, 25 cents a share or something like that. And then once they was able to buy some equipment or build out their business plan a little bit more, then they might have went up to 50 cents, a dollar. And then they said, okay, well, after that raise, then they might have, they might have said something like, well, let's do a Series A. We can raise a lot more money with that. So now you got the Series A, and then that's how the growth usually starts. It's always a beginning, and the Series A is rarely the beginning of a raise because it just costs too much money to do. You're not really going to attract a lot of these companies, these underwriters, and investment bankers on an idea. So yeah, there's definitely probably money raised before the Series A.
Can you or Kyle, Sean, either one, explain the underwriters? Who are they? What do they do? We see the names, but what's their positioning in this specific instance?
Yeah. So what they do is they underwrite the stock. They help promote the stock. So um, especially when the stock go public, they're the ones that's supporting it, so that um, a lot of times they have the buyers and the sellers and they're matching the people up and stuff like that. So they're the ones that supporting everything. Um, Usually, like IPOs, you have several different broker dealers that's um, promoting the company. Like when I was a broker, we did like Nvidia and a few other companies. So we would be underwriting that company. We would be supporting that company in the initial stages when it went public. So that's all of the outside investors. That would be the first, well, the public investors, right? Because when you go do an IPO, it's initial public offering. They will be selling to the public investors for like the first time. So they're supporting all of that. They're managing all of that.
Kyle,
Yeah,
you want to?
yeah, but just looking at that, so think about it, that's a good question, Times, because look, the underwriters who are underwriting it, but one of the key points you said is Eli Lilly. So think about it. So Eli Lilly, they don't want to get embarrassed. They don't want to be involved with something that's a flop. So they've got more money than, I mean, goodness gracious, whoever. You know what I mean? So Eli Lilly can come in at $18 a share. But look at what they did. They bought a third of the offering. I mean, that right there is just, so think about it. They don't care about the little money. They want to make sure they don't lose anything. So this shows
Mm,
them that, okay, JP Morgan's on this. What, B of A's on this? Okay, hold on. All right, wait a minute. All right, we need to take a look at this company. And now when they look, all right, and what can we come in at? $18? All right, great. And then if it came in at $18, and then I don't see what it shot up to or anything. I don't see any of those numbers yet. But I just see that it came in at $18. So what did it IPO at? But think about it. Eli Lilly, a third of the company in this arena, in that space. You know what I mean? That right there is just, that's again the rich getting richer.
yeah, that
You don't think
very true.
the people at JP Morgan, the people at B of A, yeah, talking to Eli, hey, we got something here. All right, well let me just see it go up a little bit more. We're not gonna get in just yet. We ain't gonna get in with the tadpoles. We're gonna jump in when we see some sharks. But a third of that. So yeah, this is a really good one. I mean, seeing Eli Lilly a part of and what they do, getting rid of tumors and everything. That's amazing.
And what they opened up around 18, they went up all the way to They opened up at 27.
Okay.
So
they got in
18.
so they already made right there. They got in at 18, opened up at 27. Boom, they're already in profit margin.
Yep.
And remember, they bought a third of the company. So it didn't have to be a big jump for them to profit, but they did because they had a third of it. So if they opened up at 27, and then what did they get to? What did you say they got up to?
That was the peak. They opened up at 27, and then they closed at 22.
Okay, so they still made money. Because at 18,
Yeah.
you still made money at 22.
Right. And that's the whole kind of premise of what we're talking about. We're not talking about trying to buy shares at $500 a share. We're talking about the micro cap ecosystem where you can come in on a lower price point and then see some real returns. The other thing I want to point out on this is what I like is the use of proceeds. A lot of us don't think about the use of proceeds and what that money, they didn't raise this money for it to just go sit in their bank account. They raised that money so they can go and actually deploy and go to phase 1B for something else. And then they have cash runway into 2028. So remember when the investor told us you're not asking for enough money. You need to ask for money to cover you 2 or 3 years in your business. So that goes into the use of proceeds. When you're asking for and you're raising and you're going public and you're getting this money, it isn't for you to go buy the house on the beach. It's for you to expand and grow the company.
Right.
Moving into Sionna Therapeutics. Again, another company founded in 2019, so fairly new. They challenged the Vertex and cystic fibrosis. They are another med tech company. And all of this great information you can go research, but this is what they do. Again, to us, oh, this ain't the hype, this ain't the flashy out, but there are great businesses out here, again, doing great work. The Vertex Pharmaceuticals controls 90% of the market, and other modulators generating $10 billion annually. So there's $10 billion in the market out there that they're trying to capture.
Thank you.
If you look at their funding history, they raised $330 million pre-IPO from life sciences investors across multiple rounds, and specifically life sciences investors. Again, are you talking to investors in your industry? And then they got some money from later stage VCs, of course. And then they had strategic assets from AbbVie, so a licensed portfolio. Cash position pre-IPO, they were well-funded clinical programs through phase 1 out of 2 of the trials. I want you guys to talk a little bit about this founder expertise, because a lot of times I was looking at some SBA rules and they were talking about the owner capacity and who the owner is as being a part of that approval process. Being or knowing who the owner is and the owner background matters. So these are 2 scientists that spent more than a decade researching ways to treat cystic fibrosis by targeting NBD1. And so their information, their knowledge, their expertise form the foundation of their company's therapeutic approach. You guys talk to me a little bit about how important the founder is to these capital raises, to going public, to business.
Yeah, it's interesting because, I mean, just like yourself, right, Tyrus? You understand marketing and AI and stuff like that, right? So you feel a lot more comfortable, and your ideas tend to be a little bit more industry based, so to speak, because you know about real estate, right? You know about AI, you know about marketing. So now it doesn't take you as long, as far as somebody like me. I don't know, I can't spell internet backwards long enough. I mean, well enough to look all over the place for it and do the stuff you do on it, and AI and stuff. I mean, I don't know zero. I know zero, but the only thing I know about AI is ChatGPT and Claude. So, but you, it comes now is you've been doing it so long, it's natural to you. So you're a valuable asset to any company that's looking for help with AI and marketing and stuff like that. Me, I couldn't even tell you anything about it. Except, Cal and I, we're from the old school. We knocked on doors and network and stuff. That's how we used to market. So to be a founder, to understand your industry is hugely important. Hugely. Now, let's say you have ideas, but you hire the people that know the industry. That's important too. It's rare that you're going to do a medical product and you don't know anything about the medical field or medical products or what's required, right? So yeah, it's a great benefit to know something about the industry that you're raising capital for, going public. I understand the investment industry, and I understand taking companies public, and I can ramble it off in my sleep. Whereas other people, they can't do it. I can say it to where it makes sense to the average person. Well, most people can't do that because they don't have the knowledge in that industry. So yeah, it's a great thing to have knowledge in the industry, especially if you're doing your own product.
Yeah, if you think about the founders, like I said, the founders and the expertise in that, what's so important is that they can explain what they're going to do with the funds. So when you're looking at, okay, again, I'm looking at therapeutics, but then you're telling me that they're working on cystic fibrosis. I mean, this is basically, I mean, I remember growing up, talking about cystic fibrosis and the curvature of the back and things like that. And I'm 60 years old. So you have expertise that have been studying this and working and developing to help this out. Now, when you get funds, they know exactly, precisely where the funds should go to basically help get rid of this disease or either help cure it or help basically, sustain it or whatever it needs. And it's a very good selling point because what does the investor want to know? They want to know basically what's my return on investment. And when they know what that is, their return on investment, it's a win-win situation. And that's what I would want. I would want, if I'm investing in a company, I want to know the people that are running the company, are they experts? Not that they think of something in the garage, like a Jeff Bezos or like a Microsoft or like a Steve Jobs, but they're working in the hospital every day getting this stuff done. If I have to get a brain operation, I want somebody that's cut some brains already. I don't want to be the first one. You know what I mean?
You don't want the plumber to do your brain operation.
Right.
Exactly.
And I think the other part of that founder expertise is the grit, the determination. It's not about being a perfect founder. They actually want to see founders that have had some cuts and bruises and scrapes, and they were able to get back up and keep moving forward and not give up. They want to know that when they create, because when you get into raising capital or taking a company public and bringing on partners and share, everybody's in it together. And so a lot of times we treat it as, well, it's my company and these are people I'm just getting money from. No, these become your partners. They want to make sure that they're in partnership with someone who's not just going to cut and run when the road gets tough, because in business, it gets tough. I'm watching a business owner kind of implode now because the road has gotten tough. That just lets me know, I don't know your life cycle in business is going to be that long. If you can't take some down months and survive, you might not want to be in business. If it blows up your world because you have a down month or two, you might want to rethink about getting into this, because there are winters, there are springs, there's summer, and there's fall. And you better be preparing before the winter comes, when that season does come, because the market bottoms out, things change, competitors come in. You have to be ready, and you want to be a founder that has that grit. And so if we look at February 7th, they had a strong biotech debut. They came in, set their price $18, offered 12 roughly a little over 12 million shares. Gross proceeds 219. They closed at $25. And so let's do the math again. I want to go invest in NVIDIA. Let me see what NVIDIA's stock is. I don't want to ramble off a number that isn't true for the audience. Let me see. I don't even know how to spell NVIDIA. I didn't heard it so much. I don't even want to see it.
It's 187.
187.
And after hours trading.
So, how many shares can the average person buy at $187 per share? Versus how many shares can you buy at $18 per share? Sean, if you do me a favor, between 3 months or a month, let's do 6 months. 6 months. How far has NVIDIA's trade or price moved over 6 months? By how many dollars?
How many dollars? I mean, it's probably is.
You do what, like a 3 months, 6 months, 9 months?
Yeah. I want to see what they're moving.
And just like with Eli Lilly, look at this. Goldman Sachs underwriting.
Okay, I got it. I'm pulling it up now. Over the past 6 months,
They're doing like 125, approximately 125, 124 trillion, million a day in the past 6 months.
but that's their share, that's their trade volume. I'm looking for the actual pricing.
Right,
Oh, the price?
Yeah, price.
Yeah.
What have they done? Like, what's been the high and the low from?
So there was one between 175. They got a high of 202 in November 2025, and now they're sitting at 160, 187.
187. So they grew over the last 6 months, they grew about 6.98%. Now, if you do the math and look at, okay, how many shares can you buy at $187 a share? And it moves up 6%. What is your return? Now, if you look at Sionna, they went from $18 to $25, which is a 39% growth from IPO.
Right. So
And
just, let's do it. Let's do it based on $10,000. Play with it that way.
Go do it. You got a calculator?
Yeah. So based on $10,000, you put $10,000 in, and you get what is that divided by what? What number we using?
187.
187.
All right. So you got 187 divided by 10,000. So you got what? 53 shares.
53 shares.
53 shares. 54 shares. 54 shares, and they're going to move a little bit. I mean, that. Now, how many shares could you get at $18 with $10,000? That right there. What? Let me see. 10,000. That's
555.
555. 555 shares that you can have. And then what's it moving from 18 to what?
25.
From 18 to 25. So from $18 to $25, what is that? $8? But
7.
you got 500.
They're up 3,875.
Yeah. So and that's just
minus broker dealer prices, the broker prices.
Yeah, we say open at 23, low is 7.
Yeah, $37 today.
Yeah, so not bad.
Not bad. $37.
So what is that? So if you could put $100,000 into this, make that kind of return, put it into NVIDIA, $100,000. Again, that's just a long play.
So
That's for your
according
grandkids.
to Maurice, right? You came up with 5555 or 555, right?
Yep.
For the Sionna Therapeutic IPO, right? Or when it went up to $25 day one. So Maurice said it hit a high today of $45. So remember, you put in 10,000, right? It said that would have been at 24,975. There's no way you would double your money on the video in 6 months.
Right.
Not unless you put a whole bunch of money in there. That's the point. That's the whole thing. You got to be able to put enough in there for it to move the needle. But with these, you can move the same investment number. You can move a bit more. And to Maurice's point, they are growing. And so, yes, NVIDIA is going to grow. But once you start crossing a billion, 5 billion, 10 billion, a trillion, you're not going to 10x your growth. You're going to move incrementally. You're going to 1x, 2x. But these smaller companies have the opportunity to 5x, 7x. The opportunity doesn't mean they all do it. Definitely there's some failures out there. You always have to do your research, but that's the point. The whole point of this is for you just to know that the world exists and that you can take part in it and look at it from a different lens and say, you know what? Let me go research some of these companies. Again, they got a runway into 2028. Let me go research some of these companies.
Yeah.
Again, they got who got playing that back? Gotta mute that. Playing it back is behind. Let's go into ChowChow Cloud International. Founded in 2014, cloud solutions. They're in 6 markets, 6 countries. Digital transformation consulting, professional IT, AI-powered cloud, IT infrastructure solutions. IPO price. Now, this is where we really talking. $4. Hit the New York Stock Exchange. 2.99 million shares offered. They had a small cap offering of gross proceeds of $12 million. Day one close, $12.61. Now, how many with the same 10,000? How many shares can you get at $4?
Yeah.
And then what does that look like when it becomes $12?
So you got 2,500. So 2,500 at $4. So what is that? That's $8. What is that? An $8 gain?
31,525.
Yeah.
Off of a $10,000 investment.
$10,000 investment. So if you took 100,000, that can make you look good. That one right there. But if you put that same 100,000 in NVIDIA or Microsoft or whatever, again, that's just the long play. You're taking that money, putting it. That's for your grandkids. You're not going to see that.
And the thing we want to look at, and with this company specific, another reason why I chose it, while they came out and they exploded, market corrected, now they're trading down. And so these are the things that you want to look at, because at this point, is there a decision to get out for those early investors? Do they sell or do they ride? Because if you ride, you can risk being down. I think they're down 90% as of today. Now, will they come back up? Will there be different news? It depends. But that's the ride in the market. So you don't want to jump in the market if you're not willing to ride the waves. And we've been seeing that with the markets in general. All the big companies, you have your up days, you have your down days. But I'm like falling in love with the microcap ecosystem because there's so much opportunity, so many companies. And for what we do, especially being able to work with, guide, and push companies through a process, there's just so much opportunity here that you don't see at the larger stages. Now, I think it's a part of the plan. Once we become decamillionaires. Now we can go drop 5 million on the video and ride it with everybody else. But until then, you got to invest where you're able to move the needle. So if you look at a comparative analysis, biotech and tech are the sectors. Pre-IPO capital is what they raised before they went public. The IPO prices, shares that they offered, the gross proceeds, which means this is what they received when they sold those shares that they sold during IPO, their day one performance, their performance over time, and then their market cap. And so with that information, now you see 3 different types of companies in markets that you probably don't think about often, still going public without all the news, without all the fanfare, and still making money. So key takeaways, I won't read it all. I want to read.
Can I respond? Can I say something real quick, Tyrus?
Yep,
you
go
go
for
into
it.
key takeaways. You guys remember back in the days when, you might be a little bit too young for this, Tyrus, but when like grandmothers or whatever used to give their kids like Disney stock certificate. You remember that, Cal? You remember that, Tyrus?
I know of it. Yep.
Why would they give them a Disney stock certificate for one share?
One share.
Why?
That's all they can afford.
Exactly. That's all they can afford, but just to let them know that they own some of Disney, right? Now, they're never going to make any serious money off of it, but that's like the same thing you're doing when you invest in like these larger type companies and you're putting a little amount of money in. When you're dripping into these companies, owning a little piece at a time. It's the same thing. You're never going to make any serious money. Only thing you're doing is buying it just to say you have it. So that's the point I wanted to make.
I like it. I only want to do the number 4 as a key takeaway. All 3 companies successfully upsized their offerings and priced at or above their range, signaling a robust IPR market conditions in biotech and tech sectors during 2025 and 2026. That leads into the market today. That is bringing us to today. What's important about that part? The important part is the IPO market is coming back. There's a lot of IPOs slated for 2026, some big boys and big names, and there's some small names that we don't hear about. Your homework should be, let me go figure out where these companies are, who they are, and how do I get access? How do I research? How do I take it to my board of advisors, my attorney, my CPA, my CFO? How do I get in the game? And then I want to challenge you to ask this question. When anybody tells you something, just ask why. Just why, and have them explain it. Because this is what happens. You'll hear an influencer, you'll hear someone that's talking about stock markets and trading and options, and they will tell you, go invest in these companies or look at these companies. Why? And have them explain it to you and break the math down. I haven't seen one influencer break math down just like we did just now. What they do is they show you the gains. Oh, look at the chart. But they don't show the math. Yes, the chart went up. But if you only got $1 in there, it ain't going up that far. They don't break it down. And they don't share with you all of the options that you have. You should have more options. There are more options to investing. Back in the day, it was just real estate. You should invest in real estate. Why? Then some people go a little bit further, tax advantages, equity, ownership. But most people just tell you to do something just because they heard it and they felt good about it, and that's the hype. There's a lot of hype around buying businesses right now. I'm a part of that hype. I believe in it, but I can tell you why. If you ask me why, I can tell you exactly why I believe you should buy a business and not start one today. I even believe if you're not in a position to buy a business, you should go find people who want to buy businesses and say, hey, you need a CEO? You need a COO? That way you can be what's called an entrepreneur. You don't have to start it all, but you can come in and help elevate a business. If you go to the bank and ask them about lending options, ask them what other options exist. If they are a lender, I don't want to say, I don't know how to even put it. I'm just going to tell you all the options. Even if I can sell you something and I want you to lean my way, I'm still going to give you all your options. Most lenders won't do that. They're going to tell you about their bank loan products. And then if that doesn't work for you, we'll see you later. You go get yourself straight and come back. They don't say, hey, you need to go talk to so-and-so. They might have some options for you. All of this world, finance, business, investing, it's about options. That's what the wealthy have above us all. Just options. They can make different decisions in different moments and take advantage of different opportunities because they have options and they have information. So they know that these different things exist. You may have never heard of a microcap market because the only thing that gets talked about on TV and by your influencers out there are large cap businesses. There are more businesses in America and the world other than Facebook, Nvidia, Tesla, and I don't even know who else. And the S&P 500. There's more companies that exist than that. Over 33 million small businesses in the US alone. When they talk about the silver rights and the tsunami of money coming and the exit of the old generation, they ain't talking about Nvidia and Facebook. They're talking about the small businesses, the boring businesses, the backbone of the country that's doing great revenue. So I want you guys to take that away. Just ask the question why and do your own research and figure out what option works best for you. If you want to stick with the big boys and you put a couple $100 in and let Robinhood tell you that you can do fractional investing and reinvest that and you get a half a share, you get a 25-cent dividend every quarter, and that's good for you over 30 years, good for you. But know that that isn't the only way to get it done. Sean, Kyle, let y'all give us what you got and close us on out.
Yeah, what the put and the takes, options, things like that. Yeah, I mean, you can make money in that, but where's the real money? The real money is basically structuring your company properly, and then basically going out and finding investors to invest in your business. If you put together a business and you have one, but you don't know how to do that, get on board our Capital Raising Academy, and we'll teach you and show you, what basically we did, how we did it back in the day, and now what we're doing again with Legacy Wealth Capital Group. Because other than that, why are you in business? Did you get in business just so you have a job? No, you got in business what? To basically, hopefully, to become flat out wealthy, not rich but wealthy. And if you understand that, the only way you're going to be able to do it is to structure your business properly and put together those instruments that's going to help you raise capital for your business. That's the only way. Other than that, go work for somebody else. And guess what? The person you're working for, they probably already did.
And that's a good point, Cal. I'm glad you said that because that's basically where I was leaning as well. Everybody gets into a business, starts a business to raise money, to make money, right? And they struggle every day to find capital. They may use they may bootstrap it. They may go to the bank. Bank's only going to give you so much money. There's a whole nother world out there that you could take advantage of, and it's called raising capital. If you believe your business is a great idea, there's other people that might think it's a great idea as well, and they will invest in your company. because no one person has a monopoly on all the good ideas, but there are a lot of good ideas out there that you can raise the amount of money you need to make a pretty good business. And if going public isn't your thing, or do another exit strategy. Just you can raise capital and pay your investors back in 18, 24 months, whatever, and now you own a company outright. There's many different exit strategies if going public isn't your forte, so to speak. But again, don't put yourself in a debt. I've seen too many people use their 401ks, and now their business failed and they're flat broke right now. I've seen it all too many times. Take advantage of other investors' money.
Yeah, I
That's
see
it.
people put their mortgage up and then turn around and
Lose
basically
a house.
lose the house.
Oh, absolutely. Because if you go and you look at some loans, what are some ways they tell you to get the money that you need to bring to the table? HELOC on your property, that leverage your assets, revenue financing, asset financing. So yeah, they will tell you to go pull your money out of where you have it, 401k, and bring it to the table so you can have skin in the game. And people get stuck. And I think that's what you were talking about last night on the call, when you have people out here selling corporations and they have no business.
I have no business in it.
Business is something, like Sean said, you get into business to make money, and you build a product or a service, and then you service people with that business. You're out here taking bank loans, credit cards, going into debt with no business idea, no use of proceeds. I think that's probably the most dangerous part of it. It's lacking the use of proceeds.
9 times out of 10, they're going to have financial ruin.
Yeah,
Now, I was saying 9 times out of 10, they're going to have financial ruin.
yeah. I watched the guy build a business. It turned out I was like,
you hit it right on the nail, Tyrus. It's dangerous.
how'd you fund your business? What'd you do? Oh, I took out my home. Business went this way. Home is gone. Now he lives in China.
I think the other dangerous part about this is
China.
people don't take enough money either. They get the 50,000, 100,000 because that's what they hear somebody saying. Oh, you just need 100,000. Do you really know how far 100,000 goes? Not that far. I promise you, it don't go far. You you can blow and it's gone. So you got to really think about, and this goes back to strategic planning, back to the basics, understanding what you want to do with your business, how far you want to grow it, what does it take to build it, what are your customer acquisition. Like, now we can get into a whole conversation, we got to get off here, about how to really build a business to support everything that you want to do, because we got a lot of people out here. I was on a panel before I got on this, and the lady said something that stuck out to me. She said most people get into business because they actually needed a job,
Yeah.
and they started a business, but they weren't prepared
Right.
to run a business. And so most people get into a business because they actually need a job. They need more revenue. They need more money in the house. So they get the idea and they listen to these people online that don't run businesses themselves to say, go start a business. And then I ain't gonna even do it. I keep hearing this voice in my head that I hear on social media telling you to go do these things, and they ain't doing nothing.
Right.
Be really conscious about the information that you're receiving, research it, and ask them why. And when you do that, you'll move yourself further in your business journey. That's all we got, good people. We're going to get out of here. Next week, we'll have another company or another set of companies to talk you through. We might do that presentation on just the Reg CF. I think that was a really good one that broke down information on just doing the Reg CF capital raising, what's all required in there. So we might do that next week and talk about a company that's raising capital via CF right now and what that looks like for business. So I think that'll be our topic next week. Appreciate you all for joining us. I see the ones that tapped in. I saw the comments. Remember, invite somebody. Invite them, share it, tell people about it so we can all move forward together. We'll see you next week.
God bless you guys.
Thank you guys so much.